Every generation produces a handful of people who seem almost impossible to stop. They move faster than everyone else, think bigger than everyone else, and somehow convince the world to believe in ideas that sound completely impossible. History remembers many of them as visionaries. But every so often, one of those visionaries leaves behind a question that no one can fully answer. Not, how did they become successful? But, how did so many intelligent people believe them? This is one of those stories. Imagine walking into a meeting with some of the wealthiest investors on Earth and walking out with billions of dollars. Not because you had invented a revolutionary technology, not because you had discovered a life-saving medicine, not because you had built the world's greatest product, but because you convinced people to believe in a dream. For years, that dream seemed unstoppable. Every month, new offices opened across the globe. Every funding round shattered records. Newspapers called it the future of work. Business magazines praised its founder as a visionary. Employees rushed to join. Investors competed for a chance to own a piece of it. At its peak, the company was valued at $47 billion. Its founder became one of the most celebrated entrepreneurs of his generation. From the outside, it looked like the perfect success story. But appearances can be dangerously misleading. Behind the glossy magazine covers, the standing ovations, and the billion-dollar headlines, small cracks had already begun to form. Cracks that almost no one wanted to see. Because success has a strange effect on human psychology. When everyone else believes something, questioning it suddenly feels uncomfortable. The bigger the success, the less likely people are to challenge it. Confidence begins to replace evidence. Excitement replaces caution. And little by little, an ordinary business transforms into something much more dangerous. A belief. This is not simply the story of WeWork. It's the story of what happens when ambition grows faster than reality. When charisma becomes more valuable than truth. When billion-dollar decisions are driven by emotion instead of evidence. And when one man's vision becomes so powerful that even some of the smartest investors in the world stop asking the questions that matter most. Because in business, the greatest danger isn't failure. It's believing you're too successful to fail. Before we dive deeper, let us know in the comments where you're watching from. We'd love to hear from you. And don't forget to hit that subscribe button so you never miss any of our upcoming videos. Now, to understand how a company that rented office space became worth $47 billion, we first need to understand the man who believed ordinary rules simply didn't apply to him. And that's where this story truly begins. Every billion-dollar company begins with an idea. But every billion-dollar collapse begins with something far more dangerous. A belief that the rules no longer apply. Long before Adam Neumann became one of the most celebrated entrepreneurs in the world. Long before magazine covers, private jets, celebrity friendships, and billion-dollar investments. He possessed one quality that would define his entire life. He believed he wasn't destined to build just another business. He believed he was destined to change the world. History is filled with people who shared that same conviction. Some fulfilled it. Others became cautionary tales. The difference often wasn't intelligence. It was judgment. Born in Israel in 1979, Adam Neumann grew up in circumstances that were far from extraordinary. His parents divorced when he was young, and frequent moves meant that stability was never guaranteed. Like many children raised in uncertain environments, he learned to adapt quickly, to connect with people, and to project confidence even when life offered very little certainty. Those experiences quietly shaped the man he would become. Unlike many of Silicon Valley's most famous founders, Neumann wasn't known as a brilliant programmer or groundbreaking engineer. His greatest talent wasn't building technology. It was building belief. He had an unusual ability to make ordinary ideas sound revolutionary. People didn't simply listen to him. They imagined the future he described. And once people begin imagining a better future, they often stop questioning how realistic it really is. That is one of the most powerful forces in business. Not products, not technology, not even money. Belief. Psychologists have long understood that human beings are naturally drawn to confidence. When someone speaks with certainty, our brains often assume they possess knowledge we don't. It's a shortcut our minds use every day. Most of the time, that shortcut serves us well. Sometimes, it costs billions. After completing his military service, Neumann moved to New York City with enormous ambition but very little money. Like countless entrepreneurs before him, he dreamed of building something meaningful. His first businesses attracted little attention. Some struggled. Others quietly disappeared. To most people, those early failures would have been discouraging. To Neumann, they were lessons. He wasn't learning how to build companies. He was learning how to sell a vision. And then, almost by accident, he noticed something hiding in plain sight. Across New York, thousands of entrepreneurs, freelancers, designers, and small businesses were paying enormous amounts of money for office space they barely used. Traditional office leases demanded long commitments. Young companies needed flexibility. There was clearly a gap in the market. Most people would have seen a real estate opportunity. Adam Neumann saw something much bigger. He didn't want to rent desks. He wanted to create a movement. That difference would change everything. Instead of describing WeWork as an office rental company, he spoke about community. Instead of selling desks, he sold belonging. Instead of leasing buildings, he claimed he was transforming the future of work. Those words mattered. Because investors rarely fund what a company is today. They fund what they believe it could become tomorrow. And Adam Neumann was becoming exceptionally good at making tomorrow sound irresistible. Within a few short years, that ability would attract billions of dollars, reshape cities around the world, and convince some of the smartest investors alive that they weren't investing in office space. They were investing in the future itself. But hidden beneath that extraordinary vision was one dangerous flaw. A flaw that almost nobody noticed. Or perhaps, nobody wanted to notice. Because when success arrives quickly, people often stop asking difficult questions. And that was exactly what was about to happen. By the early 2000s, the business world was changing. The internet had already transformed how companies communicated. Startups were appearing everywhere. Young entrepreneurs were leaving stable jobs to chase ambitious ideas. But despite all this innovation, one problem remained surprisingly old-fashioned. Office space. Launching a business was difficult enough. Renting an office made it even harder. Traditional leases demanded long-term commitments, large deposits, and expenses that many startups simply couldn't afford. To most people, it was just another business problem. To Adam Neumann, it looked like an opportunity worth billions. Together with his business partner, Miguel McKelvey, he imagined something different. Instead of forcing businesses into long leases, why not create flexible workspaces where entrepreneurs, freelancers, and growing companies could rent exactly what they needed? The idea itself wasn't revolutionary. Shared office spaces already existed. But Adam understood something that many entrepreneurs overlook. People rarely buy products. They buy stories. Instead of marketing WeWork as a company that rented desks, he described it as a community, a movement, a place where creativity, collaboration, and innovation could thrive. Suddenly, people weren't paying for office space. They believed they were joining the future. It was brilliant marketing, and even more brilliant psychology. Human beings naturally seek belonging. We want to feel part of something larger than ourselves. The greatest brands in history understand this. They don't simply sell products. They sell identity. Apple didn't just sell computers. Nike didn't just sell shoes. Tesla didn't just sell electric cars. Each sold a vision of who their customers could become. Adam Neumann applied that same principle to office buildings. And it worked. The first locations filled quickly. Entrepreneurs loved the flexibility. Freelancers enjoyed the energy. Small businesses appreciated the lower costs. Every new building attracted more attention. Every success story attracted more customers. But the most important audience wasn't sitting behind laptops. It was sitting inside boardrooms. Investors. The startup world runs on one powerful currency. Not money. Expectation. The higher the expectations, the more valuable a company becomes. And Adam Neumann had an extraordinary gift for raising expectations. He didn't describe WeWork as a real estate company. Real estate companies grow slowly. They earn predictable profits. Investors value them conservatively. Instead, he positioned WeWork as a technology company, a company that would reinvent how the world worked. That single shift changed everything. Technology companies receive higher valuations because investors believe they can grow faster, scale globally, and dominate entire industries. By changing the story, Adam changed how people valued the business. It was no longer about renting office space. It was about transforming the future of work. Investors couldn't get enough. Money poured in. Each investment pushed the company's valuation even higher. As the numbers climbed, something remarkable happened. Success began creating more success. The media celebrated WeWork as one of Silicon Valley's brightest stars. Every glowing headline attracted new investors. Every new investor created more headlines. It became a powerful cycle. Psychologists call this social proof. When enough people believe something, others assume it must be true. After all, if experienced investors are putting billions into the company, surely they've done their homework, right? But history repeatedly teaches us the same lesson. Crowds are often most confident, just before they are proven wrong. Behind the scenes, WeWork was expanding at a breathtaking pace. New offices opened across New York, then across America, then across Europe, Asia, Latin America. Almost overnight, the company became a global phenomenon. Every ribbon-cutting ceremony looked like proof that Adam Neumann's vision was becoming reality. Yet hidden beneath the excitement was a dangerous question. Could the business ever make enough money to justify its incredible valuation? Very few people were asking it. Because when a company is growing this fast, growth itself becomes the story. Profit quietly fades into the background. And that's exactly what happened. The world became obsessed with how quickly WeWork was expanding. Almost no one stopped to ask whether the foundation beneath that growth was strong enough to support it. By 2017, Adam Neumann wasn't just running a successful company. He was becoming one of the most powerful entrepreneurs on the planet. The next investment would change his life forever, and it would also plant the seeds of one of the biggest corporate collapses in modern history. Success has a dangerous side effect. The bigger it becomes, the harder it is to question. By 2017, WeWork was no longer viewed as just another startup. It had become one of the hottest companies on the planet. Every month seemed to bring another announcement. Another city, another building, another ambitious promise. From New York to London, from Tokyo to Shanghai, the WeWork logo was appearing everywhere. To the outside world, it looked unstoppable. Investors saw endless growth. Employees saw limitless opportunity. Entrepreneurs saw the future. And Adam Neumann stood at the center of it all. The man who had once struggled to launch small businesses was now leading a company expanding faster than almost anyone thought possible. His confidence became contagious. The more certain he sounded, the more certain everyone else became. This is one of the oldest psychological traps in business. People often mistake confidence for competence. When someone speaks with absolute certainty, our brains naturally assume they know something we don't. It's why charismatic leaders inspire millions. And it's also why charismatic leaders can lead millions in the wrong direction. Adam Neumann wasn't simply selling office space anymore. He was selling a vision of a better future. A future where people wouldn't just go to work. They would belong. A future where WeWork wouldn't only change offices. It would change education, housing, healthcare, entire cities. The vision became bigger every year. And surprisingly, investors didn't become more cautious. They became even more excited. Then came the moment that changed everything. One company decided to make the biggest bet of all. SoftBank. Led by billionaire investor Masayoshi Son, SoftBank had become famous for making enormous investments in companies it believed could dominate the future. Its strategy was simple. Find founders who dreamed bigger than everyone else. Give them more money than anyone else would. And let them grow as fast as possible. When Masayoshi Son met Adam Neumann, he wasn't just impressed. He was captivated. Reports later suggested that their meeting lasted only a short time. But that was all it took. Instead of questioning every detail, instead of slowing expansion, SoftBank chose acceleration. Billions of dollars flowed into WeWork. With every new investment, the company's valuation climbed higher. $10 billion, $20 billion, $30 billion, until finally, $47 billion. It was an astonishing number, especially for a company whose primary business was leasing office space. Overnight, Adam Neumann became one of the richest entrepreneurs in America. Luxury became part of his everyday life. Private jets, multiple homes, lavish celebrations, an image of unlimited success. To many people, it looked like proof that he had won. But wealth can create an illusion. When fortunes rise quickly, people begin believing success is permanent. History tells a very different story. Some of the greatest business empires ever built collapsed at the exact moment they appeared strongest. Because rapid growth often hides small problems. And small problems have a habit of becoming enormous. Inside WeWork, the culture was becoming increasingly unusual. Employees described an atmosphere filled with energy and ambition. But behind the excitement, questions quietly began to emerge. The company was spending money at an extraordinary pace. New buildings required enormous investments. Expansion never seemed to slow. Losses continued to grow. Yet every concern was brushed aside with the same promise. Growth first, profit later. For a while, that answer satisfied almost everyone. Because as long as investors kept writing checks, there was no reason to panic. Or so it seemed. What few people realized was that WeWork had become trapped in a dangerous cycle. It needed constant investment to maintain its breathtaking expansion. The moment investors stopped believing, everything would change. And belief, no matter how powerful, can disappear much faster than it is created. Behind closed doors, a growing number of employees, analysts, and experienced business leaders were beginning to notice something wasn't right. Not because the offices were empty, not because customers had disappeared, but because the numbers simply didn't make sense. The higher the valuation climbed, the harder it became to explain it. Still, Almost nobody wanted to challenge the story. After all, who questions a company worth $47 billion? As it turned out, the answer was just one person, and that single decision would expose everything. Every great business story reaches a moment when reality begins asking questions that success can no longer answer. For WeWork, that moment arrived quietly. There was no dramatic announcement, no market crash, no single mistake, just a series of warning signs that were easy to ignore, until they became impossible to hide. By 2018, WeWork had become one of the most recognizable startup brands in the world. Its offices buzzed with energy. Entrepreneurs filled conference rooms. Freelancers worked from stylish lounges. From the outside, everything appeared to be working exactly as promised. But appearances can be deceptive. Behind every beautiful office was an uncomfortable truth. The company wasn't making money. In fact, the faster WeWork grew, the more money it seemed to lose. This wasn't entirely unusual for a fast-growing startup. Many successful companies lose money during their early years. Amazon did. Tesla did. Netflix did. But there was one critical difference. Those companies were building technologies that became more valuable as they grew. WeWork wasn't building software. It wasn't creating groundbreaking technology. It was signing long-term leases on office buildings, then renting those spaces to customers on much shorter agreements. That meant the business carried enormous risk. If customers left, the lease payments didn't disappear. The bills kept coming, and those bills were growing larger every month. Yet despite these concerns, expansion continued at breathtaking speed. New offices, new countries, new promises. It was as though slowing down had never been considered. Because inside WeWork, growth wasn't just a strategy. It had become an obsession. And obsessions have a dangerous habit. They make people ignore reality. History has shown this pattern again and again. When a company becomes famous for growing quickly, growth itself becomes the goal. Profit becomes tomorrow's problem. Eventually, tomorrow arrives. Inside boardrooms, experienced investors were beginning to ask difficult questions. How much money was the company actually making? When would it become profitable? How long could this pace continue? The answers were becoming less convincing. At the same time, another issue was quietly attracting attention: Adam Neumann's leadership. As the company expanded, stories began emerging about extravagant spending. Private jets, luxury properties, lavish parties, business decisions that increasingly reflected personal ambition rather than careful discipline. None of these actions alone guaranteed failure. But together, they painted a troubling picture. The line between the founder and the company was beginning to disappear. One of the most dangerous moments in any business occurs when a leader starts believing that personal success and company success are the same thing. Because they aren't. A great company exists to create value. A great leader exists to protect that value. When those priorities become confused, the consequences can be devastating. Still, the outside world remained largely convinced that WeWork was destined for greatness. Magazine covers continued. Awards continued. Investments continued. The dream was still alive. But beneath that dream, pressure was building. Then came the decision that would expose everything. WeWork announced plans to become a publicly traded company. For years, private investors had accepted the story. Now, the company would have to reveal its finances to the entire world. Wall Street wouldn't be evaluating confidence. It would be evaluating numbers. And numbers don't care about charisma. They don't applaud inspiring speeches. They don't celebrate ambitious visions. They reveal reality. When WeWork filed the documents for its public offering, analysts journalists, and investors began reading details that had never been fully visible before. What they found shocked them. Massive financial losses, complicated corporate structures, conflicts of interest, governance concerns, questions about whether the business model could ever generate sustainable profits. Suddenly, the narrative changed. The company that had once been celebrated as the future of work was now being examined with unprecedented skepticism. The same people who had once praised Adam Neumann's bold leadership began asking whether his confidence had blinded everyone, including himself. The illusion that had taken years to build was beginning to crack, and once doubt enters the room, belief can disappear with astonishing speed. What happened over the next few weeks would erase tens of billions of dollars in value, force one of the world's most celebrated founders from power, and become one of the most dramatic corporate collapses of the modern era. There is an old saying on Wall Street: markets can forgive failure. They rarely forgive broken trust. For years, WeWork had survived on one thing above everything else: belief. Investors believed the company would eventually become profitable. Employees believed they were building the future. Customers believed they were joining a global movement. The media believed they were witnessing the birth of the next great technology giant. But belief is fragile. It can take years to build, and only days to destroy. When WeWork released the documents for its public stock offering, the world finally saw what had been hidden behind the headlines. Financial experts began studying every page. Journalists started asking uncomfortable questions. Analysts looked beyond the inspiring speeches and billion-dollar valuations. And suddenly, the story looked very different. The company wasn't simply losing money. It was losing staggering amounts. Year after year, quarter after quarter, the path to profitability seemed increasingly uncertain. Even more troubling, the documents revealed a series of decisions that raised serious concerns about Adam Neumann's leadership. He had personally invested in buildings that were later leased back to WeWork. He had borrowed large sums of money against his shares. His influence over the company extended far beyond what many investors considered healthy. None of these details had attracted much attention while the company was soaring. But once doubt entered the conversation, every decision was viewed through a different lens. That's another lesson history teaches over and over again. Success often hides weaknesses. Failure exposes every one of them. Within days, public opinion shifted dramatically. The same business magazines that had celebrated WeWork's incredible rise began questioning whether its entire business model had been misunderstood. Television commentators debated whether the company had ever deserved a $47 billion valuation. Investors who had once competed to buy shares suddenly wanted nothing to do with them. The excitement disappeared almost overnight. Then came the moment that changed everything. The public offering was postponed. Without new investment from the stock market, WeWork's financial future became uncertain. Cash was disappearing. Expansion had slowed. Confidence was collapsing. Inside the company, employees who had once imagined they were helping build the future suddenly found themselves wondering whether they would still have jobs. Outside the company, investors were demanding answers. Pressure mounted every single day. The board faced an impossible decision. Could the company survive with Adam Neumann still leading it? Or had the very person who built WeWork become its greatest liability? Eventually, the decision was made. Adam Neumann stepped down as chief executive officer. For the man who had spent years convincing the world that WeWork was changing history, it was an extraordinary fall. But the company's problems were only beginning. Its valuation, once celebrated at $47 billion, collapsed. 47 billion became 20 billion, then far less. Within weeks, one of the most valuable startups in the world had lost the overwhelming majority of its perceived worth. Investors watched billions of dollars disappear. Employees faced layoffs. Expansion stopped. Buildings that had symbolized unstoppable growth became reminders of overconfidence. The company survived, but the dream that had captivated the business world was over. And perhaps the biggest surprise wasn't that WeWork failed. It was how quickly everything changed. Just months earlier, many experts believed the company represented the future. Now, many questioned whether it had ever deserved such extraordinary praise. The difference between those two opinions wasn't years. It wasn't decades. It was only a matter of weeks. That's how quickly public perception can change. That's how quickly confidence can become doubt. And that's how quickly empires built on belief can begin to crumble. Yet one question remained unanswered. How could so many intelligent people, experienced investors, world-renowned executives, and some of the wealthiest organizations on Earth get it so wrong? The answer has very little to do with office buildings, or startup culture, or even Adam Neumann himself. The real answer lies deep within human psychology. Because the greatest lesson from WeWork isn't about one company. It's about how all of us make decisions when emotion becomes stronger than evidence. And that lesson may be worth far more than $47 billion. Business history is filled with companies that failed, but only a handful continue teaching lessons long after their collapse. WeWork is one of them, because this story was never really about office buildings. It was never about shared workspaces, and it wasn't even about Adam Neumann. It was about something far more powerful: human nature. When people hear the story of WeWork, they often ask, how could investors lose billions of dollars? But perhaps that's the wrong question. The better question is, what made so many intelligent people believe something that wasn't supported by reality? The answer begins with a psychological principle that affects every one of us. It's called confirmation bias. Once we believe something, our brains naturally search for evidence that proves we're right, while quietly ignoring evidence that suggests we're wrong. Investors saw WeWork opening new locations. That confirmed success. They saw billion-dollar funding rounds. That confirmed success. They saw famous business leaders praising the company. That confirmed success. What they didn't focus on were the growing losses, the unrealistic spending, the unanswered financial questions. Their minds weren't trying to deceive them. They were simply protecting the story they already believed. Then came another powerful force: social proof. When everyone around us believes something, questioning it becomes uncomfortable. If the world's largest investment firms believe in a company, if respected journalists celebrate it, if billionaires invest in it, surely they can't all be wrong, right? History has answered that question many times. Yes, they can. Crowds have been wrong before. They'll be wrong again. Markets don't reward popularity. They reward reality. Another lesson from WeWork is one that every entrepreneur should remember. Growth is not the same as success. A business can grow rapidly, hire thousands of employees, expand into dozens of countries, appear on magazine covers, raise billions of dollars, and still be standing on a weak foundation. Because growth without discipline eventually becomes risk. Real success isn't measured by how fast you expand. It's measured by how well your foundation survives difficult times. Perhaps the greatest lesson of all is the difference between confidence and competence. Confidence attracts attention. Competence creates lasting value. Confidence may open doors. Competence keeps them open. The business world often rewards confidence in the short term. Reality rewards competence over the long term. Adam Neumann possessed extraordinary confidence. There is little doubt about that. He inspired employees. He persuaded investors. He built one of the fastest-growing companies in modern history. Those achievements were real. But confidence alone could never replace a sustainable business model. Eventually, reality always asks for proof. And when that moment arrived, WeWork had no place left to hide. Yet despite everything, this story shouldn't end with ridicule. It should end with reflection. Because WeWork wasn't the first company to be driven by excitement instead of evidence. And it won't be the last. The names will change. The industries will change. The technology will change. But human psychology remains remarkably consistent. Every generation experiences its own wave of excitement, its own impossible promises, its own leaders who seem larger than life. Some truly change the world. Others become reminders of how easily people can confuse vision with certainty. That's why the most successful investors, the strongest business leaders, and the wisest decision makers share one important habit. They ask difficult questions, especially when everyone else has stopped asking them. Because the biggest opportunities often require courage. But the biggest mistakes often begin with unquestioning belief. In the end, WeWork didn't collapse because people dreamed too big. Dreams build great companies. It collapsed because belief grew faster than reality. And that's a lesson that extends far beyond business. Whether you're building a company, investing your savings, choosing a career, or making one of life's biggest decisions, never let excitement replace careful thinking. Never mistake popularity for truth. And never assume that because everyone believes something, it must be right. Because history has a way of reminding us that the most expensive mistakes are often made by the smartest people when they stop asking the simplest questions. If this story made you see business, success, and human behavior from a new perspective, let us know your biggest takeaway in the comments below. We'd love to hear your thoughts and where you're watching from. If you enjoyed this documentary, please give this video a like and subscribe to Smart Living Stories for more powerful stories about success, wealth, business, human psychology, and the life-changing decisions that shape our world. Thank you for watching. And remember, success isn't just about building something extraordinary. It's about building something that can stand the test of reality.